What is going on, everybody? It's Stas here. Welcome back to another video. So the stock market got absolutely destroyed today. We had the S&P down 1.3%, the Dow down 1%, NASDAQ 100 down over 2%, and we had the Russell down about 1%. So today we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, take a sip of your coffee, hit the like button if you guys find value, and check out my Patreon if you want my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So like I said, guys, the markets got clobbered today. We had the VIX up a ton. VIX was up about 9%. Well, I guess that's not a ton compared to what we've seen before. I think recently we had a day where the VIX was up 25%, so I guess 8% pales in comparison to 25%, but still, we had a pretty dang volatile day in the market. We had big tech getting destroyed, which I talked about in my video earlier today, which you guys should all go check that out if you didn't see it yet. And you all know at this point, big tech has a huge weighting on the overall markets. We're talking Amazon, Facebook, Google, Microsoft, and what am I missing here? Apple. All of these stocks comprise about 20, maybe even more percentage points of the S&P 500, and of course QQQ as well. And to just show you guys how much these went down today, Amazon dropped about 3%, Google went down about 2%, Apple went down 2.5%. We had Facebook getting hit the most, down about 5%. And Microsoft ended up going down a little bit over 2%. And mind you, a lot of these did have rallies later on in the day, which if I pop up SPY, you guys can see this ended up rallying as well. Hence why we saw a bit of a rally across the board, not only just the big tech stocks later in the day, but we saw multiple other stocks in different industries see a bit of a rally after the initial crash in the morning. And you guys can see that here on SPY. We were choppy pre-market between 431 and 434. Then we saw that cliff dive from 434 down to about 426, which was a drop of about 1.7% intraday. And then we pretty much consolidated at about 12 p.m. here, noon on the East Coast, at about 427. And we saw a slow climb heading into the latter half of the day, right? And if we pop back up this 20-day chart, you guys can see we actually didn't take the low out today. The low being from Friday at about 425. We actually hit 426, like I mentioned a second ago, and that is where we saw the rally. So I'm not saying this is a double bottom breakout quite yet because we're not breaking out, but we are seeing the start of a double bottom. Hey, maybe there is some, moves or rather some legs to this double bottom move that we're seeing. Maybe. It's really just too early to tell. But the fact that we are double bottoming at 425, 426, we saw a bit of a rally into the close of the market. Maybe this leads to a relief rally tomorrow, but again, it's just a tad bit too early to tell, and for all we know, we could wake up tomorrow with a huge gap down, futures very in the red, and we could be moving low 420s when it comes down to SPY. So I'm going to be watching mostly this 20-day chart. I'm going to set my alert here at 425.50. Let me do that, 425.5, and if we end up taking that level out, we're probably going to start going low 420s, maybe into the 14s, 415, 16, 17, 18, 19, and if you guys look here, excuse me, on this 4-hour chart, if we break 425, we're probably going to go to 422 first, which was that low from the middle of July, and if that were to break, we're probably going, like I said, into the 14s, maybe as low as 412, which was the low from the end towards the middle of June. So keep that in mind, those points when it comes to SPY. And QQQ, which obviously got hit the hardest today, this actually took the low out. We discussed this in my video earlier today, which again, you guys should check that out after this video. We talk more about what's going on with Facebook, the big tech stocks. This took the low out from Friday. The low from Friday was right around 355, 356, and this went to 350. And if you guys have been watching my channel for a while, we've discussed this before. We said how if 360 were to break, which it ultimately did on Friday, and today it got even worse, we discussed how this could go 350, 352, the low point from the middle of July. And we got exactly that. We got the leg down today, and now we're seeing a bit of a relief rally, which makes sense, right around 350, considering how oversold we are in terms of QQQ. And now that I'm looking at this 4-hour chart, I'm seeing a bit of a bullish, it looks like it's starting to form a bit of a bullish divergence. You guys can see the RSI has been strengthening ever since the 20th of September, right? You guys look at that down here. You can see that as we've been making lower lows and lower highs in QQQ. So is there something to that? Maybe, maybe not. It's something worth watching, but hey, just because we're seeing a bullish divergence doesn't mean we're going to rip to the upside. For all we know, we can go a lot lower. So we're going to be watching QQQ between 350 and 360 tomorrow. SPY, again, those levels I mentioned, keep an eye on those. And I'd love to know your thoughts. As always, let me know in the comments. Make sure to also hit the like button while you're at it if you guys are enjoying the video, because it really helps me out. And I really do appreciate all you guys for hitting the like button, watching these videos, and I really appreciate you if you check out the Patreon, you join the Patreon. All you guys are awesome. Thanks for all the support. And let's talk a little bit about some stocks now, my thoughts on these stocks, and some charts, like we do always. I mean, when are we not breaking down charts, guys? So Tesla is stock number one. And like we predicted yesterday, we set out Tesla could probably push past 800 today, considering they beat delivery numbers, production numbers, and the numbers are looking really good. And earlier today, we did see a push past 800. If you guys were watching, Tesla went from where did it close on Friday? 775. It ripped all the way to 806. That was a move of about a little bit over 4%. So we did rip today. We had a nice start to the day, but as the overall markets were getting clobbered, tech was getting hit, Tesla also got hit. I mean, listen, guys, Tesla is not a $30 billion company anymore where it could go up when the markets are going down. For the most part at this point, Tesla's going to be going down with the markets, considering the market cap is about 6, 7, 800 billion, in that range. I forget exactly what it is, but take my word for it. It is a pretty big dang company at this point in time. It is no longer a $30 billion company. So it makes sense that we got the initial pop to 806 based on the delivery numbers, and it also makes sense that we sold off after that due to the large market cap that Tesla has these days. So I'm going to be watching it between 780, 785, which it seems like we are finding support there right now, right above the 50 moving average, and I'd like to see it break past 785 again, since it closed under 785 at 781 today, and 785 was that high point from the middle of April. So if we start moving out of there, this could go 800 plus, again, in my personal opinion. So watch out for Tesla. NVIDIA, ticker symbol NVDA, is another one that I'm looking at, which is finally starting to see some red. This one's down to 197 now. It got down from 230. That was back in the beginning of September, so about just a month ago, it was 230, and now it's 197. It's down about 15%, putting it well into correction territory, and as of now, it is holding the uptrend. Sure, it's not above both moving averages. In fact, it's under the moving averages, and we're seeing a death cross, but based on this trend line, as long as it holds, the uptrend is continuing. And to be honest, guys, it's hanging on by a thread, because you can see here we're getting really close to that low point from the middle of August at about 190, which is the previous higher low, which if that were to break, now we're talking the uptrend would be breaking. And at that point, we could be getting obviously lower prices, lower valuations. And for me, NVIDIA is not the best valuation here for a long-term investment. I mean, we could argue that all day. I think it's still a bit overvalued. But as a swing trade, it looks pretty decent right here. I'll be honest with you guys. And if we do break the trend line, the swing trade idea goes out the window, but for me, the valuation would be getting a lot better if this were to get to the 160s, 70s, preferably under 150, which probably won't happen, but we're just talking hypothetically here. If it were to get under 150, now we're talking a valuation that I would consider at least nibbling a starter position for the long term, if that makes any sense, right, guys? So I'm watching NVIDIA. AMD is another one which momentarily got under 100 today, which is pretty interesting considering AMD has not been under 100 in about 3 months, a little bit less than 3 months. So at this point, we can see AMD has been downtrending pretty much since the beginning of August, so 2 months now from 122 down to about 100. We've been moving pretty, tightly, I guess you can say, within this downwards channel. Now we're trading under both moving averages. We're seeing a death cross, so there could be more downside in AMD, and I would consider it at 95. 95 was resistance earlier July. At that point, we could maybe see some support forming at an old resistance as a new support. That is how technical analysis at a very basic level works. I mean, sometimes when stocks break out of a resistance, they typically hold that resistance months later as support. If the stock were to pull down months later, which in this case, it's pulling down. And not to toot my own horn, but I timed this thing beautifully. I was in AMD at $77 a couple of months ago, and I actually sold out at 118. No kidding. All you guys in my Patreon know this. I sold out, and I made about 50%. I forget exactly how. No, not 50%. Geez. More like 35%. But still, I'm taking 35% in about a couple of months of holding. And now I've just been patiently waiting for re-entry on AMD. And heck, this might be the time. During this sell-off that we're seeing as QQQ's down almost 10%, SPY's down 6%, now might be the time to slowly scale back in, again at $90, maybe $95. We'll see where it goes. And GameStop, AMC, these are two stocks I'm watching. I feel like when these are dying off a bit, people start to take their eyes off of these stocks. That is when we see a huge rip, and everybody's like, holy crap, where did that come from? I feel like GME is getting there. It's just not there quite yet, considering the markets, everything's selling off. I feel like if we have a couple decent days, a stabilization week or whatever, I feel like we could see a rip in GME. I mean, we've been making lower highs and higher lows, digging ourselves deeper into this wedge the past couple of hours. Months rather. So I feel like direction, it needs to be picked. And we're not breaking out yet, and we're not breaking down yet either. So we're going to be seeing what happens within this wedge on GameStop. And again, I feel like when people take their eyes off these stocks, they start ripping. So I'm going to set an alert at 180. Mark is at or above on GameStop. And I'll set another alert at maybe let's put it at 160. A mark is at or below alert. So we'll see what direction this ends up picking, whether it's up or down. Same thing with AMC. I mean, AMC is also in a wedge. Lower highs plus higher lows at the same time. I already have an alert at 42, which didn't break yet. That's right above the 180 moving average on this 4-hour chart. And I'll set another alert at, let's say, $35. Mark is at or below $35. So we'll see if this breaks under 35. We'll probably see a leg down. We'll pick the bearish direction. But if it breaks out of 42, obviously that would be a breakout. So I'm looking for direction in GME and AMC, being patient with them. Shopify is another one that I'm watching right now. I feel like I've been watching this for weeks and I haven't pulled the trigger on it yet. I'm pretty close though. I mean, on this 4-hour chart, it looks like a falling knife. I'm not going to lie to you guys, but if you pull back a bit onto, I believe, the yearly chart. Yeah, the yearly chart looks decent. We're right around the 180 moving average, which has held as support the past couple of months, right? Right at a higher low here at about, at this point, we're at a higher low at 1,300. You know, we held it before at 1,100, 1040, 875. So I think if buyers step in here, we could see some sort of rally. And on the 3-year chart, you guys can see we're right by that 50 moving average, right? At about 1280, 1300, which buyers have stepped in over the past couple of years as well. So don't be surprised if we do get a bit of a relief rally on Shopify here and on Adobe, ticker symbol ADBE, which, full disclosure, I've been buying Adobe the past couple of past couple of weeks. It's really just been the past week. I started a position at about, what was it? I think 580. I'm down a little bit on the position, but I plan on adding more. I think Adobe could be bought up right around this 50 moving average on the 3-year chart. This is exactly where we've been seeing buyers step in the past couple of years. You could also argue the yearly chart, like Shopify, it's holding the 180 SMA, which we've seen buyers step in the past before. So Adobe, guys, look for a potential dip buy here. I'm not telling you what to do. I'm just saying what I'm looking at. I'm looking for buyers to step in here, and from there we could end up seeing some upwards pressure. So overall, that's pretty much it. I mean, we talked about some stocks I'm looking at: Tesla, NVDA, AMD, GameStop, AMC, Shopify, and Adobe. I mean, we could talk more. We could talk all night for that matter, guys. But I got to keep these videos under. The goal is under 20 minutes. 16, 18 minutes is the ideal amount of time, and we're pretty much right there now. So I'm going to wrap it up. If you all enjoyed the video, hit the like button, subscribe, drop a comment, let me know your thoughts, and check out my Patreon. If you guys want my real-time buys, sells, call-outs, morning update videos, private Discord access, all of that's on Patreon, link down below. And now is the best time to sign up, early in the month, right? It's still the beginning of the month. Now is the best time to try it out, sign up. So check it out, link down below. And if you guys want to hear me talk more about big tech, my thoughts on Facebook, what the heck's going on, I'll pop up the video from earlier here. Check it out. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.